Welcome back into the Rocc Pod, presented by the Royal Oak Chamber of Commerce. I am John Gay from Jagged Detroit Podcasts.
My name is Andrea Arndt. I am an attorney at Dickinson Wright.
I am Lisa Bibby, your local neighborhood realtor with Keller Williams.
And I am Trish Carew, third-generation jeweler and owner of Your Personal Jeweler.
With so much changing in the state of Michigan when it comes to insurance, we have a lot to discuss today with today's guest. That is Kathleen Novetsky from Aaa. Welcome. It's great to have you.
Thank you so much, John. I really appreciate it.
And you've been a member of the Royal Oak Chamber for quite some time. You go back a little ways, don't you?
I do. Since when I started with Aaa in 1997, I joined the Royal Oak Chamber. Our company has been a part of the chamber much longer, and then also became affiliated with the Business Women's Network, which is a part of the Royal Oak Chamber of Commerce.
So I know that last July there were changes to the no-fault law insurance that were implemented. And I know personally when I went to renew my policy, there was a lot of confusion. So could you tell me more about these changes?
Absolutely. Thanks, Trish. That's a loaded question. Lots of information that changed July of 2020. The state of Michigan since the 1970s has had no-fault insurance. We all had to have unlimited medical coverage on our auto policies. There was no choice. And that was wonderful. Regardless of who was at fault, you knew you always had coverage if you were injured in a car accident. However, over the course of years, the cost of that coverage has gone up, and to provide that coverage for a lifetime. So last year, July 2020, the state of Michigan put into law a reform law. And this law changed a variety of the different coverages and options. One of the factors that most are speaking about are the personal injury protection, the medical. We all now have a choice if you want to keep unlimited medical. That means if you're injured in a car accident for the rest of your life, anything tied to that car accident injury that's medically necessary would be covered. You have the choice of dropping down a step to go to $500,000 capped medical per claim, $250,000 capped medical per claim, or if you have a particular type of medical coverage, you may be able to opt out altogether, whether it's qualified health coverage through an employer or if you're on Medicare. And then the lowest coverage, still having something on your policy, is $50,000 if you are on Medicaid. So there's a lot of different options from top to bottom. And it's very important that individuals understand what their current medical coverage does cover for them in a car accident, and if they pay first. And then knowing what they're comfortable with if they do decide to decrease their coverage. My line to my customers is you do have options. You can choose less coverage than if you're in an accident, you have less coverage. So I always want to make sure that they fully understand the information and are comfortable with the choice that they make.
I just want to say one thing. A few years ago, someone in my family got in a really bad car accident, and it was a big, horrible mess. And I have to say the no fault was amazing. I mean, everything was covered for several years until the person got better. And I just couldn't imagine having any less coverage if I could get everything covered. So there are some benefits. And when we had looked into the differences in prices, it didn't seem like the rates went down that much for lesser coverage. So for us, at least, it seemed to make most sense to have the most coverage that you can, because if you are ever in an unfortunate situation where you would need to use the coverage, it makes such a big difference to have it.
Andrea, absolutely agree. And everyone has their own opinion on this. I have wonderful medical coverage. I'm not touching my unlimited medical on my auto with a 10-foot pole. I pay a little bit more for it, but I've seen what can happen. Even making a choice to go down to the $500,000 capped medical. Imagine having a closed head injury in a hospital. That can get used up in a few weeks. And then you're living with whatever capped options and coverages you have with your own personal carrier. The other thing that changed along with the options for medical is the bodily injury liability. Prior to last year, someone could have as low as $20,000 per person, $40,000 per accident liability, meaning that's all they're protecting themselves from if someone sues them because you've injured them in a car accident.
Wow.
And I guess if you're someone that has zero money, maybe not a job, maybe that was the fit for you. You can't even obtain coverage that low now. The state's recommendation is $250,000 per person, $500,000 per accident. There are options higher, but if someone chooses lower than that liability coverage or less than unlimited medical, every renewal they have to sign forms to opt for those lower coverages that are a little lower than the recommended coverage levels.
Kathleen, I want to ask you about something. I want to see if I understand the genesis of this correctly. And part of the reason this law changed is because of sometimes our sky-high insurance rates for auto here in Michigan. But the flip side of that is without that unlimited coverage, you hear stories, these awful, awful stories of somebody that was maybe paralyzed in a car accident and has no movement from the neck down and needs constant round-the-clock medical care that with that previous coverage, they're set for life. They are covered. They don't have these gargantuan medical bills because they're covered. But the other side of it is people want to find a way to get the cost of insurance down. Do I understand the dynamic there correctly?
You are absolutely correct, John. That's a perfect way to put it. There is a reduction in price if you do choose less medical, but what can happen and the extent of that, I mean, you're talking lifetime benefits as opposed to a dollar figure. And that can really make a large difference when it comes to a severe injury. The other thing that changed, but it didn't go into place until this July 2021, was the fee schedule that doctors or labs or hospitals can charge the auto insurance carrier when there is an auto accident injury. There were really no standardized cost for a CAT scan or an X-ray or a surgery. So the insurance companies were getting gouged. If you fell in your home and hit your head and you needed a CAT scan, you're paying whatever your insurance that you have personally has on a schedule to pay for that CAT scan. If you got hurt in a car accident, they could charge us 10 times more. That fee schedule went into place July of 2021. Not sure why it took an extra year, but that's just the way the law was written. And now there is a fee schedule for that. However, the hospitals are taking a hit because they're used to those larger amounts. It's basically a cost shift. I can tell you for the medical, the personal injury side of the changes, that no more than 5% of my customer base is opting less than unlimited. And those that are predominantly on Medicare, so 65 and older, which is scary because there's a lot of limitations when it comes to Medicare and what they cap. I had knee surgery not long ago and was in physical therapy and asked my physical therapist, if I was on Medicare and hurt in a car accident, what's my annual cap for physical therapy? She said $2,000.
Wow.
And I was in physical therapy for 3 months with just a knee surgery, let alone something major. And Medicare can go back a year, review something and realize, well, maybe we don't think that was necessary and ask for money back. So I'm learning a lot in this process, but I understand those on a fixed income, don't have as many assets, want to save some money. I totally understand. But it's scary to know the coverages that are being removed by choice, but everyone else also needs to carry insurance and they have to be able to afford it.
I remember a few years ago, prior to these changes in the laws, I was in a couple of car accidents and within a couple of months, just a bad luck, wrong place, wrong time. And I remember the medical bills. I remember my health insurance and my auto insurance. I don't want to offend you and say this wrong, Kathleen, but like they were almost fighting with each other where, no, this is you. No, this is you. No, you pay it. No, you pay it. And I got frustrated and kind of threw my hands up and kind of said to both of them, you two figure it out because somebody's paying for it and it ain't me. I remember getting really upset by it.
Right.
So with what you're just talking about with, some of these standardized rates and things, we're making the auto insurance cost more in line with the medical insurance having a set rate. Would that affect this a little bit and that there's less of a vagary between who covers what between auto and medical? Would that affect it in any way?
Well, probably a better way to answer that is, and this is another part that always has to be verified now following the law change, just because of all the regulations. The coordination of benefits sounds like what you're talking about. What I need to determine when my customers have insurance is, does your medical, your personal medical, pay first for car accident injuries? They either do or they don't. If they do, and we can get a copy of the letter with your name stating John has medical that pays first for car accident injuries, I can give you the coordinated medical benefit discount because we know we're paying second, we're not paying first. But many medical policies out there are written to save money that they will be secondary. So your auto policy pays first. If you have unlimited medical, it's never going to go to your own personal auto. for something medically necessary. But there's so many changes that have occurred. It's still an education on the medical carriers, because not all of them are based in Michigan, and employer benefits areas, and especially if your company isn't based in Michigan. We're the only state that offers unlimited medical. Even prior to the law change, the next state to us, coverage requirement-wise, only required $50,000 of medical. All other states are less or none. So then you're basically suing to get coverage if somebody injures you.
Wow.
Yeah, I know. It's a lot. There is a lot of benefit to it, but there is a cost to it as well. Absolutely.
Yeah, I was in a car accident back when I lived in California, and it's completely different. And it is all up to you to get reimbursed. And those medical expenses add up. And you're talking about months or years of, rehabbing and doctors and everything else. So when I got back here, I'm really glad you just clarified that, because when they gave you the option to pay less, nobody mentioned that you also had the option to have unlimited medical. And I wasn't really clear as to what that is. So I think I switched it, but I want to switch it back because I realize how much that medical costs. And you had mentioned that the state recommends $250, $500 liability coverage. How much liability do you recommend like an individual person have versus someone with kids or someone if they're retired?
That's a great question, Lisa. And that's one thing that's overlooked in this law because the focus really has been on the medical. But basically, it's different for every person. And I tell my customers, I don't know what you have. You need to talk to the financial people you trust, your CPA, financial advisor, who knows what you make, who knows what you have, savings, investments. There might be some retirement programs that might be protected from a lawsuit, but you should have bodily injury liability a step above whatever your asset based is. Because basically, if I was to injure someone in an accident severely and they sued me for pain and suffering, they're going to sue my policy and I want the buck stop there. If someone has more than $500,000 in assets, which is easy to do with a married couple and a house and investments and savings, there's also an umbrella liability policy option for people that gives you another blanket $1 million of coverage after you've tapped out your home or auto. Then here's an additional coverage so that they're not coming after your personal assets. They're using the policy coverages that you choose. And liability is pretty inexpensive.
So my wife and I have a little bit of it's an inside joke, but it's not really an inside joke because I have had a lead foot a couple times. I've had a couple speeding tickets. I've had a couple accidents. How much does a person's driving record really affect the auto insurance, Kathleen?
It does. Any moving violation, whether there's points or not, is going to have an effect on your auto policy unless you have an upgraded policy that maybe waives the first ticket or accident. However, I think my brothers brought me up to the mindset that if you ever get a ticket, you always want to go to court, assuming it's a local ticket. The courts do just want to make their money, and typically with a good record, you can barter it down to a non-moving violation, even if the fine's higher.
Been there, done that.
Yep, and it doesn't affect your insurance. Now, I will tell you, so it depends on the category. 5 over the speed limit compared to 20 or a DUI, make a big difference. Standard tickets are on your record for 2 years. Major tickets, DUI, careless driving, they're on there for 5. Although the severity drops in half after about 3 years.
Accidents too for 5, Kathleen?
Accidents, well, and every company may be filed a little bit differently with the state of Michigan. I can speak for AAA. For a surcharge, if you have an accident where you're at fault, that surcharges your policy for 3 years. It may affect your claims discount for 5. So, for example, when someone in my household, not me, decided to back out of the garage and take the bumper with it, that would be an at-fault accident. And a younger driver, we wouldn't want an at-fault accident because their age is already affecting the policy. So we paid that $2,000 out of pocket. Now, when that same driver got hit in a parking lot, not his fault, we used the insurance, didn't have to pay a deductible because we chose broad collision. And even though a paid claim can have a slight effect on your discount, nowhere near an at-fault accident. So it's got to be a large accident to where I personally would use up my policy for it. Because I've seen, because you never know what can happen. One at-fault accident, someone else in the household gets a ticket, then somebody else has a claim. It starts to multiply at that point. So the last thing I would want to do is make a $2,000 claim that over the course of 3 to 5 years is going to cost me twice that.
So that's very interesting. What other factors do you consider when you're trying to decide whether or not to bring a claim to an insurance company?
If you're talking auto, because there's auto claims and home claims, number one, you want to make sure you have the coverage to support that. I always tell my clients, calling me as a consultant is not calling claims. So I get a lot of hypothetical questions of, if this happened, what should I claim? And for auto, it has more to do with, are you at fault? Are you not? I mean, if we're talking a $10,000 accident, typically most people don't have that sitting around. So that's a reason to go ahead and use your policy. You realize your rates are going to go up based on what occurred. However, it'll be spread out over time and not the same amount that was paid out on the policy. For homeowners, same thing. We offer a claim-free discount if in the previous 3 years you don't have a home claim. So making a claim where we pay out maybe $500 or $1,000 may not be worth making based on the discount that you'll lose for the next 3 renewals. But a $5,000, $10,000, $20,000 claim or more, absolutely. That's why you have insurance.
Can you explain AAA's prepaid road service membership?
Absolutely. The AAA membership started really as a road service membership only, and has really expanded. So for example, right now we have for $44, person can join, they get an extra one free for the first year. Each member, the membership is individual. Each member has 4 prepaid road service calls per year. Anywhere US or Canada, any car that you're in. It doesn't matter if you're in your car, you could be with a friend out, their car breaks down, stuck in a ditch, flat tire, run out of gas, you name it, you can use that. It's already paid for 4 times per year, US or Canada. Because one tow, I don't know if you've ever had to have your car towed, could be $70, $100. There's really no limit of what they can charge you. And if you need to get towed farther, the rate gets much higher. We have a membership that you can always get back to the towing place that came to get you to get to safety, but we have a 5-mile towing, 100 and 200-mile towing membership if you travel a bit or go up north. It just depends on your driving habits. Our memberships now include national, online, local retail discounts, travel discounts, and also identity theft monitoring for each individual member that's included with that as well. So it's a nice protection. You actually can use your AAA membership as a bond card, God forbid you get pulled over or are given a large ticket that you want to give them that in lieu of paying for it right on the spot. But of course, you have to pay it back down the road.
Well, it's great to know all the different features that AAA offers. And as a realtor, we know we cannot close on a house unless they have their homeowners insurance set up. But what a lot of homeowners don't realize is that there are so many other things that they can get covered. You know, for instance, their water, their sewer, things like sump pump, backup coverage, or even protection from pipes that might have lead in them. What does AAA offer? And can you kind of go into a little bit more detail about some of these additional packages that they can get insured?
Yes, and I know how important timely and accurate home insurance policies are for closing, because often customers do kind of leave that to the last minute. What's probably close to our heart in Royal Oak, I will never forget August 11th, 2014, the large flood. As I was based right off Woodward in Royal Oak and my customer base was all in this area, just the amount of people that dealt with sewage and water in their basements. And there was water backup coverage offered prior to that, but it wasn't a common talking point. Definitely was after that date. So coverage for your basement, water, sewer, sub pump backup. Basically, I say any liquid that can come up through the drain or come out of your sub pump, the damage that it causes, the water remediation cleanup, because, you know, water sitting anywhere for more than 3 days, mold starts. You really need to make sure it's taken care of and sanitized correctly. But if it's damaged your flooring or your cabinets or your drywall has to be cut out, that coverage also is ripping out what's damaged and putting it back together again up to the limit that someone chose. You know, we go from $5,000 of coverage up to $50,000 of coverage. So it just depends. If it's an unfinished basement, I typically recommend $5,000. Just for the cleanup alone can get that high sometimes depending on the damage. Also, something newer in the industry over the last few years, and especially important in Royal Oak and older communities, is the service line coverage, the coverage from the street to the home. Now, not everyone needs it. If you're in a newer neighborhood, newer pipes, that might not be something top of mind, but it is something you can get on your home insurance. A lot of previous policies didn't offer it, so sometimes that means requoting and rewriting a policy if they're looking for some of the newer optional coverages available now. Although I know in Royal Oak, my customers tell me that the city has partnered with a company that offers just the sewage line coverage. I think they said it's around $70 a year. Now, I haven't seen the policy. I don't know what it covers or who they have to use or their deductible, but it sounded very inexpensive compared to putting it on a home policy. Because keep in mind, if you make that claim on a home insurance policy, now it's affected your home insurance rate, as opposed to having something independent. I'm just not well-versed on what they're offering the residents specifically. Also important on a home policy is if your home had to be rebuilt or a major repair, you want to make sure you have a little bit of cushion for the cost of material and labor, which obviously in COVID have spiked way high. But even prior to that, I've heard from builders and designers that the price of items even prior to COVID really was spiking up higher as well. So even if we've correctly today figured your home is going to cost $300,000 to rebuild, and a rebuild cost includes demolition and haul away, and 3 years from now, a tornado takes your home away. Well, let's say the city in which you live has changed their ordinances, their building codes, their material requirements, or the price of your hardwood floors has now spiked. We can put a 10%, 20%, or higher cushion percentage above and beyond the written dwelling coverage to give you that cushion to make sure you can get back the same size and quality home, like, kind, and quality.
Yeah, that cushion is something that's so important because a lot of people say, oh, well, my house is valued at around $400,000. Well, in today's standards, to build that, it might be $480,000, $500,000 just to rebuild exactly what you have. So having that extra coverage is hugely important.
Absolutely. Thanks so much for bringing that up, Lisa. We're now coming into, as you know, as a realtor, going to the market value spike with the lack of homes on the market. What that's doing, something that we had back, I think early 2000, is when market value was outpacing the cost to rebuild. So if someone's mortgaging $500,000, but our cost to rebuild is only $400,000, that mortgage company wants to know that they have coverage to protect their loan, although we're never going to build you a larger house. So we're trying to get creative in, if someone has $400,000 on their dwelling, but they give an additional 20% cushion for an optional coverage, now we might be able to provide them a coverage that's a little bit less expensive that'll still satisfy the mortgage. So you're right. I mean, really, market value for an insurance company doesn't come into play unless it's affecting your loan amount, because your land isn't going anywhere and that has a value. We're talking about rebuilding your structure. And, we get creative. As if I'm quoting someone in an older home and they have carpet over hardwood, I ask them, if we have to rebuild your home, is it safe to assume you don't want us to lay hardwood and then put carpet over it? Let me know which one you would want us to rate for in a rebuild so that they're not paying more than they need to.
Yeah, and even with waterfront properties, it's really good to be aware. Like, I know of a family whose their house burnt down and they were on a septic system, but even though the insurance would cover the rebuild of the house, because the septic was so close to the water, and now a lot of lakefront properties are transitioning and they're moving their septic fields back or connecting to city sewer, they wouldn't actually give him the funds to build the house unless he was going to do an engineered septic, which can be, 3 to 4 times the cost. So he was unable to even rebuild his house just due to that. So it's good to kind of look into it and see, do you have room on your lot to even put in a new septic, and talk with you for, insurance questions to find out what's covered and what's not.
Absolutely. No, you bring up a good point, Lisa. And even if you may have the right coverage, if you don't have some of those cushions, because especially if you have an older home, what the rules and laws and ordinances you have to adhere to in a rebuild, or even if half your home's gone, you still have to obtain those permits and go by their rules. And there could be a lot of variance in cost depending on what's needed.
Does the insurance cover living arrangements if you need to do a rebuild or anything where you can't really live in your house comfortably?
Absolutely. A part of every homeowner's policy in Michigan, it's either called, depending on the company, additional living expenses or loss of use. And that's a good one to look at. Now, if somebody has 2 homes, maybe they don't need a huge amount of coverage on that particular line item. But if you have 1 home and we're talking a year to rebuild it, you need to rent something furnished. Basically, that coverage should be enough to put you living as you were in a different location. You're setting up phone, utilities, you name it, and paying for not only where you're living, but for to be furnished because you probably lost all of your furniture, and your personal property is covered under a separate line item, but loss of use is huge. Normally, it could be anywhere from 20% to 40% of your written dwelling coverage. But if someone has a smaller home, they might want to increase that coverage a little bit just to make sure they have enough protection. It's a pretty inexpensive policy just because that coverage isn't used as often. For example, for me personally, if you recall in March of 2017, where 1 million people were out of power due to that windstorm. We were out of power for 7 days, and our house was about 35 degrees. So that coverage on our policies, no deductible applies. After 2 days, they covered us to live in a hotel. They covered the difference between eating in and eating out until that electricity was restored because our home was not livable at that temperature. If our home was 60 degrees in the middle of the fall, a little bit different than something not inhabitable based on, the time of year and the temperature. But that's something that's covered under loss of use because it was a power outage that's covered for where we had to go live and move. Of course, had to make other arrangements for the dog.
Of course. Kathleen, we've covered a lot of different aspects of the homeowner's insurance. What about personal items? What personal items do you recommend covering separately from the main policy or in addition to?
Great question, John. The personal property coverage, when you think of that coverage, is your standard furniture, electronics. Think of everything in your cupboards, everything in your drawers, everything stored in your basement and your garage. People do underestimate their wardrobe that take years to build. And if it was gone in a fire, that's a lot of money because we're covering you to at least, hopefully you have coverage to replace it at brand new prices. But there's limits on sections for jewelry, for furs. There isn't necessarily a limit for sporting equipment, but I know a lot of golfers, hunters, there's guns. There's, depending on your hobbies, there are things that you can cover to value, providing details of what you have that you can separately schedule. And they're covered for more things happening to it, even if it's just damaged. For jewelry, if you lose it, if it pops out, if it's stolen. Most coverages don't have more than $1,000 or $2,500 per item on your home policy for jewelry unless you have provided an appraisal and have it separately scheduled. There's also china and artwork and things like that there are limitations on. So those are the categories. If you have things of value that you used most often, I tell people, I have customers that have a lot of jewelry, but often they'll keep it in a safety deposit box because they're just special family heirlooms. You shouldn't need to put them on your home policy. I got to believe if someone steals it out of the bank is liable for your safety deposit box. But those things that you wear most often, I have my wedding ring is the only thing that I have insured because it's something I would replace if something were to happen to it. But there are many customers of mine that have a lot of jewelry. They just enjoy wearing it. And you're more apt because you have it on all the time to lose it or damage it, just to have that extra coverage if you want.
I noticed too that AAA is now requiring GIA certification for doing jewelry appraisals. And before that wasn't required. Is it because you were receiving claims where the amount that was insured was too high for the pieces?
So a couple segments to that question, Trish, that I can answer. We've always asked for appraisals. We were finding a discrepancy in the amount of coverage. For insurance, it should be a replacement coverage. Now, you can go buy a ring for $5,000 and maybe they'll hand you an appraisal for $7,500. But if we can rebuy it for $5,000, why should you have to insure it for $7,500? But also, we need to know that the person that is signing the appraisal is certified to do so. For us personally now, it's items 10,000 or more. We have to verify that certification, and that appraisal can't be more than 5 years old. We can insure a $2,000 item. The appraisal can be 10 years old. Now, I let my customers know that whatever appraisal you're giving us, that's the amount we're covering it for. If 5 years down the road it's valued higher, you would need to supply a new appraisal because we're always going to cap it at that. But we were finding a discrepancy. I always want to make sure my customers aren't paying too much. If you bought it for this, unless it was a once in a lifetime sale, let them know when you're getting an appraisal that it's for insurance replacement purposes, so you're not overpaying.
Well, thanks for that information. And I do have to give a shout out to Trish, who did appraise a lot of my jewelry. So thank you. You did a great job. So Kathleen, can you explain to our audience the importance of an umbrella policy?
Absolutely. I alluded to that earlier when we were talking about bodily injury liability. An umbrella liability policy is a blanket liability protection to cover your assets if you're sued because either you've injured someone in a car accident, they've hurt themselves in your home or on your property, you get into a crazy bar fight in Belfast, we'll cover you if you have enough liability coverage. But again, it goes to your asset level. Your financial person is the perfect person to tell you, okay, here's what you have in income, here's what your home's worth. Maybe you have life insurance that has cash value and savings, but maybe these 401ks aren't a part of a lawsuit because maybe they're protected. And there's so many different nuances. I'm not an attorney, I'm not a financial planner, but I do go to those that I trust to make sure that I'm protected enough because I would want, God forbid I was sued, they sue my policies and I have enough to cover what I have, so the buck stops with my policies. And liability policies are pretty inexpensive. They go higher if you need higher coverage or if you have a lot of younger drivers. There are certain individuals that may not be able to get them. Let's say you have a lot of at-fault accidents, a lot of tickets in the household. There is a limit. You have to qualify. You have to be under a certain point level or accident level to obtain them because it does cover parents. And, we received ours when our son started driving. We wanted to make sure, because they're more apt to get into an accident, that we had the right protection. And then as assets increase, making sure we have enough.
I have noticed that being a AAA member has additional benefits, such as discounts for third-party services.
Yes, there is. In fact, just a growing list of companies that we get discounts for. I use myself as a guinea pig downloading our AAA mobile app. And when I'm out and about, it will tell me I can get a discount at Henderson Glass, or I can get a discount at Lens Crafters, or, all the different areas that are around you that you can save at. But there are a lot of online discounts as well. Through our online membership offering or through the mobile app, you can buy gift cards, you can buy services, and you can build AAA dollars that come off your membership renewal cost. So there's a variety of ways to not only get your discounts and save your money throughout the year, but also start to pay for your membership with all of these additional savings. There's a large list of companies, retailers, restaurants that you can show your AAA card and have a discount. It's just knowing where those places are. So those are very available on our website and on the mobile app.
How does the mobile app work, Kathleen? Does it show you a notification if you're near a discount, or you just open it up and it tells you what discounts are around you?
Yes and yes. It just depends on the notifications you want to receive.
Okay.
We also have a program at AAA called Aaa Drive. Almost every insurance company has it. Some people like it. Some people aren't a fan of Big Brother in their phone. But a monitored driving program through AAA is new as of the last few years. And we do it through our mobile app. So when I'm in the car, it knows I'm driving. It knows I'm on I-75. If I'm going 80, it knows I'm speeding. If I'm going 69, it knows I'm under the speed limit. It knows if I'm stopping fast, or if I'm coasting, or if I'm holding my phone while I'm driving. So there's additional savings on the policy. Again, I have some people that are getting 9 to 15% discount off their rate.
Wow.
However, then at renewal, Johnny, son, A16, brings down their score because it's a household rating. So there's a way to save money. Again, totally a preference. I understand my customers that do not want to be a part of that. It's just a new offering. What I like is that some of our new policies, and a lot of companies, not just AAA, are providing options, and you choose what discounts you're comfortable with because there's ramifications front and back, just so you can kind of tailor what works for you and where your comfort level is.
So I like driving my car in sport mode, so I don't think I would have any savings if I tried that.
Well, I can use the example that we have 4 in our household. I only have my youngest son and myself on this AAA Drive program because my oldest son and my husband, let's say, would bring down our scores. And the app doesn't know if you're a passenger or a driver. So I manipulate mine to know that when I'm done being a passenger in my husband's car that I can mark he was driving and I was not, because you can do that on the app. You have a week to mark.
If Kathleen's boss is listening, forget that last part.
No. Anyone can do this. This is not just me.
I had a question about that. To me, when that first came out, it seems, well, a little bit invasive, but the other ramification I thought of, well, if they're tracking what your driving is like, and let's just say I'm an amazing driver and I always do the speed limit.
Right.
But if you don't, can they use that against you and start raising your rates because they suddenly say, hey, this driver is constantly speeding or...
Right. No, Lisa, that's a great question. I can only speak for my company because I'm not familiar with how it works with the other carriers. So for us, it changes at renewal. And the 4 months prior to renewal, the 120 days, that's where we look at how many miles, because you have to drive enough miles, at least 1,000 miles, and you have to, where you're driving, and it'll look at your score. For us, being a part of AAA Drive is always a savings over not being involved. It can go down as low as a 1 or 2% discount if your scores are really low, and you can opt out at any time. So the way ours works is the first time you switch to us, if you're a new customer, you get a flat 9% savings for 6 months. Now at renewal, it's going to adjust up or down. And I've had customers do it for the first 6 months and opt out after that. Save some money.
Well, thank you so much, Kathleen, for all the good information. And now it's time for our Fishbowl Question of the Day, where we pull a totally random question for you. Lisa, can you pull the Fishbowl Question of the Day?
Absolutely. Let's dive in here and see what question we have. Ooh, what is the best smell in the world?
Okay, well, this happened recently in my house, but I make the best pumpkin chocolate chip muffins. So I love that smell.
Ooh.
Yum. When are we coming over?
Happy to bring you to a chamber event.
Well, thank you so much, Kathleen, for joining us on our podcast. It was a pleasure to have you. How can our audience get in touch with you?
Thank you so much for asking. My phone number at the office is 248-270-4350. Email sometimes is even faster, and that is Novetsky, Novetsky @acg.aaa.com. Thank you.
And we'll have all of Kathleen's info in the show notes as well.
My name is Andrea Arndt. I am an intellectual property attorney at Dickinson Wright, and I help my clients protect their inventions and build their brands. You can find me on LinkedIn and on our firm's website, www.dickinsonwright.com.
I'm Trish Caruth, third-generation jeweler and owner of Your Personal Jeweler. I specialize in creating custom engagement, wedding rings, and fine jewelry. You can find me on Instagram and Facebook at The Personal Jeweler or on our website, www.thepersonaljeweler.com.
My name is Lisa Bibby. I'm a realtor with Keller Williams Advantage. I put the real back in realtor. Looking to buy or sell your home, purchase an investment property, or even start an Airbnb? You can find me on Facebook, YouTube, and Instagram at Sold by Lisa B.
And I am John Gay from Jag in Detroit Podcast. If a podcast is part of your 2022 marketing plan, I am the guy to help you from soup to nuts, A to Z, to conceptualize, create, edit, publish your podcast. You can find me at jagindetroit.com or on social media at jagindetroit. I want to thank everybody for listening to this episode of the Rocc Pod. It's a production of the Royal Oak, Michigan Chamber of Commerce. For more information on the Chamber, you can find us at royaloakchamber.com. Thanks, everyone.